Right, morning everybody. We're just letting in some last peeps. Okay, we're going to be talking about banks, bonds, and loan criteria today. And this is the ambit of Jenny, who's going to be watching me and grading me to see if I know anything about origination. She's got a sore throat, so she doesn't want to talk. Right, who knows what is LTV? Now, LTV is the bank Jenny's talk, because remember that these bond originators and bankers all talk in a funny language. They talk foreign, and they do it on purpose to confuse everybody, but it is just the way they talk. But what is LTV? Well, it means loan to value, and I just want to explain to you, loan to value is so important. If you just look at the way banks do their lending, the loan to value is everything. It is what they consider the property's worth and what they prepare to give it to you at, what they're prepared to loan you for the property. It's not really the value of the property, because you can get a buyer for R1 million. Obviously, you can get a buyer for R1 million, but the bank will only find 500 grand. And that makes a big difference, and I can show you why. So if you're looking at, for example, a selling price of R1,100,000, so you get an offer of R1 million, you think, lekker, I think this property is worth R1 million, you've got R1 million, the owners accept R1 million, the buyer's paying R1 million, so everybody agrees that R1 million is the number. Then you send your offer to Jenny, and Jenny says, lekker, this is fantastic, thank you for supporting us, and I'm going to get a bank valuation out. And she gets a bank value, and he only finds 900. So what happens now? Now the problem that you've got is what people don't understand is loan to value. It is not loan to the value that you think, or the buyer, or the seller, or Jenny, or I think. It's a loan to what the bank valuator thinks. So in this example, if the bank valuation is 900, that means that 900 out of R1 million is only a 90%. That means that they're going to loan you 90% of their value. And 90% of 900 is 810. Now, do you guys see the problem there? If they give you 810 and the guy's looking for 100% bond, you can't do the deal. He's got to suddenly find another 90,000 Rand, or the seller's got to come down to 900 to make it work. Okay. So you've got to get that in your mind. And this is a brilliant thing there for price counseling. People, the owners are saying, yeah, I'll put it up for 1.2. Somebody will buy it at 1.2. And what you actually need to get through to people is, that's fine. You can agree on 1.2. Even a buyer can agree on 1.2. And I can agree on 1.2. But in the bank valuator comes, if he doesn't find 1.2, your deal's going to get nowhere. So because why? He'll find R1 million, and R1 million out of 1.2 is only 80%. Therefore, he's going to give you 80% of the amount that they see, which is R1 million. So they're going to give you 800 out of 1.2. That's a big difference, man. That's not going to, your deal's going to collapse. So you've got to bear this in mind when you're dealing with clients, when you're dealing with, and this is probably why it's good to pre-approve the client, and it's even better to have the right value of the property. Now, the bank valuators at the moment, I'm led to believe, are not finding less value per se. So it's not very often that they find the less value. They don't always come back and say, oh, we're only finding 800 out of R1 million. That's not typical. Why? Because the market, we are pegging our prices based on sales. We look at a CMA and we are finding a market-related price. And the banks are just looking for a market-related price. So they're pretty happy with that. Okay, so many times the loan to value is kind of what we sell it for, and the banks are happy with that. But all I want to explain to you is what the loan to value means. And it means the bank value, not your value or the selling price. And they will lend you money on that value. And it impacts right through everything we're going to talk about. Right. Are there any questions on this? Because it's not hard. No. Good. Right. So what are the LTV guidelines? Okay. So what do we mean by guidelines? Well, each bank's got its own set of criteria that it uses to manage this process. And who knows why? This is your first prize. Yeah, there's a chance to win a prize. I'll show you the prize. There are two. So you can either win this one, which is a laptop bag, or a leather presentation folder Okay, well, you can't see, but they're beautiful, believe me. Okay, so the person to win can choose the first prize, the folder or the laptop bag. Who knows why the banks have got to ever changing set of rules? Anybody? Huh? Nobody. Come on. Come on, Shanae. I can't believe you don't know. Lola knows.
Because the interest rate changes.
Okay, so
because the interest rate changes.
Kathy says the interest rate changes. That is a correct answer, but it's not the answer that you can win with. Who knows?
Well, circumstances change in the economy.
Okay, Catherine.
The law changes.
Change, correct. But what
The area dictates price?
Area dictates prices. No, that's not correct because the loan to values are set by the bank regardless of area.
And the bank's risk appetite at that point in time may change from time to time depending on their loan value book and factors like that.
Okay, well done, Luke. It's got to do with the amount of money the banks have got in their reserve. Remember that what the banks do when they lend money is they borrow money from the Reserve Bank, and that's prime. They borrow it at what? I don't know, 5%, and they lend it out at prime at 7.5%. So they're making a margin of 3%. But when they borrow, let's say they borrow R1 million, the Banking Act says that they can lend out 10 times the amount that they've got in their bank account. So when they're lending this, let's say they have a big run, Jenny goes crazy and does like 100 bonds in a month. So Jenny's in Mauritius, she gets a phone call, the 101st bond won't fly. Why? Because the bank's used all this money. And they can't just borrow more money because the Banking Act determines on how much they can loan, and of that money, how much they can lend out. So it's a very simple switch. So what the guy at the bank sits there with his finger on a button and he says, oh, we're running out of money, change the loans into value, to make it harder to lend. All of a sudden, you're not getting 100% bonds. All of a sudden, now we need deposits. All of a sudden, this nonsense. So it's all about the money in the supply chain. So Luke, well done. What do you want, Luke? A or B? Presentation folder or laptop bag?
The leather folder.
Okay, come fetch it. Thank you, Luke. Well done. Right. And thank you for Tinas for supplying the prizes today. Right. So let's have a look at the loan to values now. So what are these loan to values? Now, the loan to values are the guidelines. The guidelines around the loan to values is what each bank is going to do about this. So let's start with the first one. There's a maximum loan period. Now, I will show you these things if you want to. And this is where Jenny earns her living because she knows this off by heart. She knows everything. She doesn't even have to look it up. But what I'm showing you now are the criteria, not the actual amounts, because the amounts change by bank from time to time. And they actually don't change that much. I think they change quarterly, Jenny. I don't know. You know, it's not they don't change it every day, but they do suddenly change it. And you'll just suddenly find that Nedbank's not giving loans and you don't know why. And then that's why, because they run out of money or they've done something, they've changed their risk appetite, as Luke quite rightly says. So the maximum loan period depends on your age. So if I apply for a loan, or Luke applies for a loan, we are going to get a different loan. Why? Because the interest rate is going to be different. And more important, the period of the loan. Because I'm closer to 75 than Luke, I mean, only by a year or two, but I am a little bit closer than him. And Luke's a little bit younger by a year or two. So he gets to get a 20-year loan. And Anton, you can only have a 5-year loan because your time's up, my boy. And you're going to die soon. So we don't want you to die without a bond, with a bond outstanding. The other thing that LTV is governed by selling price. So the banks look at the selling prices and they look at their risk and they say, okay, for anything under 3 million, you can get 100%. That doesn't mean you will get 100%. It depends on the person, but you can get it if you ask for it. But over 3 million or over 3.5 million, depending which bank, will only give you 95% or will only give you 80%, depending on the bank and depending on the price. So they've all got their own criteria. Okay. It depends on employment as well. So whether you are full-time or part-time or self-employed is very important. So a full-time employee that works for the Department of Health is going to get a far different loan from Kali van Tonde, who owns a fishing shop and Rano Tour Emporium in the Kruger Park. because they're going to ask him to jump through so many hoops to get his loan. And not only that, they're only going to give him 80% anyway. Okay, so and there are some banks, I think there's one bank that might give you 100% on a self-employed, but it's like really not easy. The banks typically don't give self-employed. Why? Because they don't believe the self-employed. They don't believe Kali. He says, no, I swear, I promise you my books are lacquer. They're absolutely real. This is my turnover and that's my salary. Yeah, Kali, you're full of it. So they won't believe him. But if you're full-time employed with the government of Department of Labor or whatever, you know what you're getting. It's going to happen. Okay, vacant land. The loan to values for vacant land changes everything. A piece of land that's vacant, that they will look at it. You might get 50% or 60% with the one bank, and you might get up to 80%. So please remember this. As soon as the land's empty, don't send Jenny an application for 100% bond. Jenny's going to come down there and slap you because she knows it's impossible. And you just waste her time, you waste your client's time, you waste your sellers and your buyer's time. So this is where you guys need to know these things, because you are a professional property practitioner now, remember. I'm very proud of you all. So on that basis, you need to know these things. So you need to be able to say to him, my friend, you cannot get 100% bond for a loan on a piece of vacant land. Okay, now you need to check with Jenny, because there are some banks that might give you something like that. If you Harry Oppenheimer, I suggest you probably can get 100% on a vacant piece of land. But if you just a normal Joe working in the streets, working in town, then you're not going to get it. So don't darken Jenny's doorway with your nonsense. She's told me to tell you that. Okay. Building loans. What's a building loan? It means you bought the land and you're going to build. Okay, so here's the land and now you're going to build, and then the bank, some banks will look at it, other banks won't even look at it. It depends the area, it depends if it's in an estate, it depends on a whole host of things, whether they're going to look at it. And this is where the originator is so important, because you don't know everything and you can't know everything. Because these things are there, there are 4 banks, 5 banks, there are 6 banks, and they all got different criteria for this. All you have to know is that these criteria exist. So when you're dealing with a client, if it's not a vanilla client, if it's not just a simple mom and dad who are employed and they got 2 children and they want to live in Begari and they're both employed with companies, then you know most things can get 100% or even 105% now. So you can get those things. But now if one guy's self-employed, then you know, ooh, there's trouble with self-employed. If it's vacant land they're buying, ooh, it's going to be different. And then you can phone Jenny and find out the god-awful truth about what's going to face them. SA citizens working overseas. So, my son's buying a house for me, and he's a executive chef on Harry Oppenheimer's yacht in the Caribbean. He earns 900,000 Rand a month, and it's all fantastic. And I want him to get a bond for me. Well, they're only going to give him 50% because he works overseas, and some banks will give him up to 80%. But just know that they're not going to give him 100%. Okay. There's another problem with residents and non-residents. So non-resident. Well, good luck for non-resident. I think you can only get 50% ever as a non-resident. But if you're a permanent resident, then they treat you like a normal person. Okay, so there is a difference there.
Anton, yes. Sorry, the non-residents now, ABSA can go up to 100% for non-residents clients. So yeah. I tell the agents, let's try for 100%. If they're not going to give us the 100%, then please ask the client for a 10% deposit, but that's only with ABSA.
Cool. Okay, so non-residents, permanent residents, you need to find out the status of the person, and then you need to give Jenny a quick call and say, listen, this guy's a Zimbabwean, he lives in South Africa, he's not a citizen, he is a resident, or his wife's, and what's happened in the past is where the guy's Zimbabwean, the wife's South African, they just put the property in the wife's name and just ignore the whole residency thing because it's going to impact on their bond. Okay, companies, well, now, if you want to have a hard day, a long day on a horse in the desert, you go down the company's route because it's a nightmare. The banks all say they will lend companies money, and they all lend it from 50 to 80%, even 100%. But the sad and disappointing truth is it's not so easy. They're going to ask for financial, audited financials. They're going to ask you for 3 years of track record. They're going to ask you for a whole host of things. So as soon as your client says, I want to buy it in a company, you need to stop everything and say, listen, sit down, let's talk. What company is it? No, my company is a small company called MTN. We do telephones. Well, then, okay. But if it's Kali's hairdressing and fishing emporium, then when last have you had financials? No, we don't do those things here in Brakpan. Well, then you've got a problem because Jenny can't even look at it. because we need audited financials. And then every single time I heard a person say they got their own company and you ask them for audited financials, they always say these words. Oh, my accountant's doing them now. They're nearly ready. Okay. Then the next question you ask them is, when last did you actually have a set? Oh, no, about 4 years ago. But they're nearly ready. Okay, so when they say that, you must just like slap him and walk away because you'll never get them, never happens, and Jenny can't be dealing with that kind of nonsense.
Anton, may I have a question?
Yes, ma'am.
We're having problems with financial statements, audited financial statements in complexes in Midrand. Now, I've got 2 deals pending financial statements and that the trustees haven't met in 3 years.
Yeah, you're not going to get a bond. If they haven't met in 3 years, it means the place is in a shambles. It's
Julie,
very difficult. Yeah.
So Julie, sorry, Anton, Julie, the banks, all the banks don't ask for financials for the companies. They look at the lending, risk lending in that complex. So they have a percentage of lending in that particular complex. So Standard Bank is the bank that always requests a updated financials, latest financials.
Mm-hmm.
Okay, so if they don't have financials, the bank wouldn't look at it, but there must be a problem why they haven't met for, I mean, all the complexes are having Zoom meetings and financials should be done. So the bank, like Standard Bank is saying that although COVID's coming in, but all the other complexes are meeting for Zoom meetings and the financials should be done. But financials that Anton is talking about now is different from complex financials.
Yes,
He's talking about financials for the actual business.
Yeah. No, I'm aware of that. I was just bringing that to the attention. But Jenny, I'll speak to you afterwards. Maybe we can speak to the client. Okay, thank you, Anton.
Right. Okay, so the costs included. Well, Jenny's got good news on that front that the bank, I think Nedbank kicked off with 105% loan. That means they're contributing. The costs are probably 8% of the bond if you just work it out quick, sticks in your head. So they are offering 5, which is kind of half. They're meeting the client halfway. In the old days, they used to get 108%. And I think you can actually get 100. You can get full costs included if you're very sharpish, if your credit record's good and bank's account, and Jenny's lucky. But just know that there are banks, and I think all of them, not all of them, but most of them are already giving 105, and they will all, because they can't, when one does it, they all have to take it.
Okay, so ABSA will only give bond plus cost to individuals with degrees, and we have to produce the degree accountants, doctors, lawyers. So they would go up to 105%. Standard Bank would go up to 105%, up to the maximum of 1.8 million. So the client, irrespective of what he's earning, he can earn 100,000 and he's looking for a bond up to 1.8 million, he can get bond plus cost as long as it's his first time that he's buying the property. And now Nedbank's come in with 105% bond.
Cool. Okay, so these are the LTVs guidelines. So the banks will look at your client on the age of the client, what is the selling price, is he employed, is the land, is it buildings, is it a building loan? Is he a citizen, non-resident company, and do you want costs? So those are the things that you need to be able to explain to your client. Or Jenny will explain it. You only need to know it so that when you formulate your deal, you don't do the wrong thing. Because once you sign a deal with a South African citizen and a Ghanaian, you have entered a whole host of complexity into the deal because you know immediately they're not going to get the bond. And if you've put the 100% bond with that mix, you are a dismal agent because you're setting yourself up for failure. It's a complete waste of time. So at that point, you really need to phone Jenny or find out what's for what. Right. There's a new thing on the market called a bond cancellation penalty. Okay, it's only been around since banks existed. Now, what is a bond cancellation penalty? Well, it's simply the banks are saying that I've ring-fenced R1 million to lend to Anton so he can buy his house for 20 years. I'm expecting income for 20 years, my interest. So I'm expecting to earn about R1 million because it costs you almost a double to buy a house. So I'm expecting to earn R1 million. If you cancel tomorrow, if you pay off your bond tomorrow, I'm missing out on my income. But I've set my whole business up to lend you this money on that basis. So I'm going to penalize you. Okay, but the Credit Act came in and said, you can't just penalize them at will, because they had all sorts of funky stuff going on in the past. Now it's a maximum of 3 months, I believe. So what is the bond cancellation penalty? Well, it's typically 90 days notice that you need to give to your bank. If you don't give the notice, who knows what is the penalty there? What is the penalty?
Interest. It's the interest on the remaining period.
No, it's close. Interest for what? Jenny's trying to help you. Jenny's cheating.
It's 3 months bond installment.
Yes, it's the bond.
It's the 3 months bond
for 3
installment.
months. Yes, so it's the bond installment for 3 months. Okay, so it's not. So now okay, now you've got something in your head now. Now you can think about it. If it's a cash deal and the guy signs today, pays the money tomorrow, it could register in a month's time. That means the client, the seller, on cancellation is going to have to pay 2 more installments. That's a lot of money, man. If it's a 2 million rand house, he's paying another 40,000 rand just because you, the agent, didn't remind him that he has to cancel his bond. And that's why if you look at the FICA documents on the offer to purchase, on the seller's FICA, and the seller's got where he signs, it says, don't forget to give bond cancellation notice. And on the FICA documents, it's asked you for your bond account number and bank. Why? Because NGL is immediately going to alert the bank to it straight away. But you as the agent are going to say, when you take the mandate, Mr. Smith, give your bank cancellation notice today. It doesn't mean you're going to cancel. There's no penalty for not cancelling. There's only a penalty for cancelling. Now, if you forget or it doesn't happen, it's not a train smash, because normally a deal takes about 3 months, which is 90 days. So typically, it'll just be the last 3 months. But you want to see an aggravated client when NGL gets it done in 6 weeks, and they're going to pay bond cancellation penalties for another month and a half. Okay, it's going to really aggravate the guy, and you are the person that's going to be blamed because you didn't tell them about bond cancellation penalty, when in fact it's Jenny's fault. Okay, it's not Jenny's fault. It's always your fault. So please make sure you do that. So what happens if it's not given? We know if it's not given, they simply charge you the interest, the bond payment anyway. Okay. A notice has an expiry date. Who knows for the second prize what the expiry date is? Not you, Luke. You can't walk away with everything in one day.
3 months.
90 days.
How long, Shanae?
90 days.
90 days. Ken says 3 months. Okay, I think it's a bit longer than that. But Ken was first.
I'd say 6 months.
6 months. So Ken was first with 90 days. Is there a 90-day one, Jenny? Yes. Okay. So well, done, Ken. You can come and fetch your laptop carrying bag. Thank you very much. Okay. So the banks are all different. Just know that there is a termination. One is 3 months. One is 6 months. One lasts a year, and in between. Okay. So that's not up to us. But all you need to know is that you need to give the notice. And how does it get given? It's very simple. The banks have just got a helpline. You phone the bond guard, say, listen, I'd like to give you notice to cancel. They say, Mr. Van Vidder, this call is recorded for security and training purposes. And then they will tell you, okay, it's done. And they'll probably send the client a SMS or saying, we confirm that your bond notice has been given, or email or some kind of communication. And one of the banks wants
to give you a reference number.
They give you a reference number.
So they give you a reference number immediately.
Okay, cool. Okay, so then you've got a reference number for the call, and then you've given your notice, and then there's no more drama. Okay, and then all the clients say, but I don't want to give notice because what happens if I don't cancel my bond? Then they're going to cancel my bond. Guys, you must use the word. This is notice, just notice of my intention to cancel my bond in the future. It's just simply that. It's just, hey, bank, I might be canceling. And then if you don't do it, you don't do it. Okay, right. Easy peasy. Next one. I've lost my mouse. Okay. Now you get a client who says, okay, I want to buy a 2 million rand house, and what's your salary? My salary is 10,000 rand a month. And you immediately do a sum in your head and you say to him, hang on a second, you can't own a house of 2 million rand with a 10,000 rand salary. How much do you have to earn to get a bond for 2 million rand? Who knows? What's the rule of thumb?
30% of the income.
Yeah, so 3 times. So if you earn 10 grand, if you want a 20,000 rand bond, you need to earn 60,000 rand. Is that right, Jenny? Yeah, you need 3 times more than your together or alone, but you need 3 times more. So, but the guy says, no, but I've got a side hustle. You don't understand. I work for Cully's Fishing Emporium selling bloodworm to him, and my whole garage is full of worms and maggots, and I make good money out of it. And can't I add that to my income? And the short answer is, if it's cash, is what? What's the answer if it's cash money? Can you use it or can't you use it? You don't know. Well, I know there's one bank that does look at cash. I think it's Standard Bank will look at cash income as long as it's recorded in some. I think it's got to be paid into your bank account. But most banks won't look at cash. Yeah.
Sorry, Anton. So that cash that Standard Bank is talking about is for domestic workers, okay. Gardeners. Okay, not the cash that Cully's got getting from his worms.
Okay, well, bad luck. Bad luck for Cully then. Okay. So what kind of money will they look at? Well, they'll look at things like commission, overtime, rental income, investment income, maintenance, and housing allowance and subsidies. So just know that there are categories of income, extra money, side hustles, other jobs that they will look at. Now, commission's quite easy, it's quite standard, and they also look at you whether you are if you're an agent and a full-time commission earner, you could probably earn up to 80%. They'll use 80% of it. If your commission is partly commission and you're a salaried worker with a little bit of commission, then they work on a different, and each bank's different. So all you've got to do is then phone Jenny and say, Jenny, this guy is a diving instructor, but on the side, he grows bloodworms and he earns an income commission from the sales of that. And it's through a salary slip. I think what Jenny's saying is that the commission must be on a salary slip. Otherwise, they're not going to look at it. The cash must be through a salary slip. It can't just be like side money. Okay. Overtime's easy. They just have to prove it with pay slips. Again, and it's got, then they will, some banks will give you 100% of your overtime, others 70%. And it depends if your overtime's overtime or if it's just occasional overtime. I mean, if you work 20 hours overtime every month for the last 6 years, then they'll look at it. But if you work 1 day of overtime last year, then they don't give you much for that. Yeah. Rental income's a bit tricky. They're all very different there. Obviously, you've got to provide a lease and show them the income on your bank statement. So they've got to see where the income's going. And then they're going to ask you questions. Some will only give you 40% regardless of what it is. Others will give you up to 80%. And I think you can actually get 100% of it if you can demonstrate to Jenny that if it's a standalone property, that's income exceeds its costs, and you can show that and demonstrate it. I think they can motivate for that. But the rule of thumb is they're not going to take it all. Just know up front that most people are not going to get all of that income. So you can't say, yeah, but that little townhouse doesn't impact on my income because it's fully let and I get the money covers it. Well, they'll only look at 80% of that. Therefore, it is going to impact on your loan. Okay. Investment income, well, then you just need to prove a letter from Old Mutual or a bank statement showing Old Mutual income and that it's regular and it's proper. And this is a proper investment. It needs to be a proper, legitimate investment. Okay. Maintenance is easy. You just need to show your divorce decree and the proof of your banking, and then they'll give you an amount for it. Again, slide. Housing allowance and housing subsidies. Jenny is going to go pale and collapse if I asked her to show you this now, because they're all different. Eskom can give you a subsidy. You can get a housing allowance from the Department of Education. Your company can give you a housing allowance of 110% or 120%, but they'll only look at a percentage of it. So it's very, very difficult. All you need to know is that housing allowances and housing subsidies are very well looked at, and they will be considered, and they will make a great difference. So please, and especially, this is the most important thing you need to remember. Government employees are all eligible for a housing subsidy. Now, those subsidies are valuable because if I joined the Department of Education and I became a primary school teacher, teaching fishing techniques learned on the Vaal River from Kali van Tonder's Fishing Emporium, then what's going to happen is I'm going to start qualifying for a housing subsidy from the first day I'm employed full-time for the department. Then 6 years later, I meet Marai, who is the hook bloodworm supplier, and we fall in love and get married, and I say, right now I'm going to buy a house. The department actually backdates your housing subsidies right from the first part. So there are some people that have never bought a house that have been working for 10 years for the Department of Education, Agriculture, Health, whatever. And that thing, it adds up. And it adds up to a lot of money. And if you tell Jenny that, she gets very excited because she knows that they can take that subsidy and add it into the bond calculation, and they can show it to the bank and say, okay, it's R1 million property. The guy's got no deposit, but he's got a housing subsidy that's going to give you 200,000 Rand up front. Okay, it'll make a difference. So please, housing subsidies and allowances, you need to ask the person, are they eligible? Do they work for any department, any government institution, or does their employer offer that? And if they do, you need to hook them up with Jenny immediately, because that's quite a complex discussion that you don't really need to get into. You just need to know all of these things are going to happen. Right. Oh, right. That's the end of that one. Now, if you look at this very last one I want to show you, is called FLISP. And the only thing I want to tell you about FLISP is that it's FLISP is finance linked individual subsidy program for first-time home owners. So the FLISP is for the sort of the entry level to your market. It's the bottom line of FLISP is you need to earn less than 22.5 or 22,000 Rand combined. That's it. If you earn less than that, you can apply for FLISP funding, and you need to be a South African citizen. You've got to be 18 years older, and you can't have a housing scheme. So first-time buyer. This is a first-time buyer thing. So if you've got a for 22,000 Rand, you know, you're talking about a sort of a 1 or 2 million Rand, not even about 800,000 Rand, Jenny, something like that. So let's say 3 times 3 8 at 24. So let's say 800,000 Rand property. Under that will qualify for FLISP if they haven't bought before, if the income is less than 22,000 Rand. But this is a very valuable product, and you can get a lot of, you know, especially if you're working in small townhouses or in the sort of smaller market, this will make a difference. Okay, so that's the fastest bond origination tour you can ever have. Now, I'm going to send you out Jenny's notes on this. Now, you need to take a deep breath when you read them, because they go through each bank and every detail of it. It's all you should do rather though, is look at the criteria that are required and the exemptions that are there and the exclusions that are there, and just know that these things exist. Because you don't want to become a professional bond originator. Why? Because these numbers change all the time. So it's no use knowing the details of Absa banks at 80% LTV and you get 105 from Standard, but only 90% on a 3 million Rand and a 3.5 million Rand from First. It's all great, but you don't need to use that. All you need to know is that these things exist so that you can apply them and that you can talk to Jenny timelessly. Okay. And with 1 minute and 2 seconds to spare, thank you very much. If there are any questions, you can send me no, that's the stupidest thing I've said today. If you have any questions, you can phone Jenny, who knows the answers. And I'm going to send you Jenny's notes, and have a nice day. And if Malcolm here.
Go sell some houses.
Yes. Thank you, Malcolm.
Yeah, but